Here today to review a hypothetical May expiration and June expiration bearish butterfly trades. What we have here is we are 56 days from expiration. We have the Russell at 828, and we're going to come in about 20 points under the money at 810. By guidelines, and like I said, we're following guidelines, we could possibly start at 800 or 810. If we were, however, to start at 800, it would put us immediately into a delta theta ratio problem if you're following the guidelines. So we were not able to do that. I mean, I can demonstrate that quickly if you want. We can kind of come in here. And if I were to come in here and put this in, it wouldn't work out. So we're going to go ahead and move from here. You'll notice coming in, our delta theta ratio is a little bit higher than normal, indicating, and our cost of the butterflies is actually going to be 1214. So this is going to indicate that the market makers are skewing things a little bit to the upside. No big deal. It's like I said, that's all kind of built into the guidelines of the trade. So we come in here and we move ahead one day. I'm going to back off. We back off a half an hour. We get a very large up move the first day. We take a look at the price charts here. We are get this big gap up in the market kind of runs on us, giving us a delta theta relationship issue. Now, if you were watching this in Thinkorswim delta is slightly different than option view delta, so you may not have run into this problem. Certainly, and if you didn't run into this problem, your basic trade for the whole month was to sit here and do nothing. Since on option view we do run into this problem, and it's going to give us some neat things to talk about because it's going to kick us back and forth in the trade a little bit and make it a little bit more difficult. And it's going to hit on most of the management rules for a single 1/3 position. I think it's a good idea. We'll go ahead and do that. So having a delta theta issue here, and the fact that the price is actually more than 20 points over our short strikes, what we're going to do is we're just going to take this 1/3 of the position and we're going to roll it up from 810 up to 830. So if I move ahead a half an hour, you'll see that happen. We're just going to shift up, and we're now at the 830 level. We are going to have our delta theta ratio is going to be corrected. This is what our new position is going to look like. So from here, we were forced to do that. Now, like I said, our initial setup, and I didn't go over this, our reference point was 810. Our reference point remains 810, which means we are scheduled to add to this position when Russell hits 850, and we're scheduled to add again when it hits 870. Our rollback point is going to be, if the market pulls back on us, it's going to be when the market's at 790. So we'll move on ahead here to the, let's see, to 410. So we're going to sit here for about 15 days or so. And we'll go all the way to 410 before we do anything. If we take a look at the price charts, the market has kind of ranged sideways for a little while, and then we had this very large down move back to our support here. So we'll close that off. We are down to the 790, actually past our 7090 price level. If we look at our analyzed chart, we're well outside our break-evens, and we're well past our adjustment level to bring this back. So we're simply going to bring this back to at the money. So we're going to come in here, and if I move this forward a half an hour, you'll notice we'll jump from 830 down to our short strikes at 790. And this is our new position here. We are still, let me make sure my T-log is, yeah, everything's marked, so we should be okay. We're still at about break even, and more or less we've reset the position. Our reference point has to be pulled back to 790, which means we're going to add to the position at 840, at 860, and then roll at 870. And again, we have our rollback point back here at 750. There's what our analyzed graph is going to look like. From here, we do nothing for 16 days. So we're basically going to sit in here, and the market's going to chop around. And there's a reason why I'm kind of going through this quickly. First of all, I have no questions to answer. And the other thing is, after we show these 2 months, which were relatively simple months, I would like to actually go through another trade with you guys. So that'll be fun. So we sit here till the 26th, and we'll take a look at the price chart, see what the price was doing. And there was our breakdown to support. We got our support bounce, and we're back up here in the 800 level. The issue with our position here is our delta, our maximum delta for a position this size with 1/3 in is minus 250. We've exceeded that. So that is an issue for us. There are other rules determining whether or not you can actually roll up or make a move here. In this case here, I can. We're going to go over a case where we can't in just a few minutes, but I can actually make a roll. So my move here is going to take this 790, and since I'm running into a delta problem, I'm simply going to roll it back up to where we started actually, up to 810. So we move ahead a half an hour. You'll see this hop up to 810. Now we're down a little bit of money. We're down about 470. And here's our analyzed picture. Everything looks fine. We let's see. We'll roll ahead to the very next day. So we shoot ahead to this day. Our price continues to move up. It's another $7. Our delta is high again. Now, one of the rules here that we have is that if you have to do one of these delta rolls, you're only allowed to do one from your reference point. So our reference point was 790. We were forced to roll to 810. It's not going to allow me to, the rules do not allow me to roll to 830 at this point. So I'm going just to maintain my high delta and stay here until I hit an add point, which would be at this point 790 reference would be over 830, which we haven't actually exceeded 830. So at 830 I would actually add to this position. The rules don't let me do anything right now, so we're just going to more or less stay here. Another reason I can't add to the position too is that I'm not past my I'm not 20 points past my short strike. So in both cases I'd have to be over 830 to do anything. I just can't do it. So from here we're going to move on. We'll take a look at the price chart first. Right, here's that additional move. And moving on, there's really nothing that we do here until, let's see, 5.8. We'll stop here at 5.3 for a minute. You'll notice we are under 21 days to expiration, which is going to put us at our lower profit target of $5,000. If you are familiar with the rules, your initial profit target on this trade would have been $15,000. We'll go over that a little bit more when we do the next one. So we're almost there at our reduced profit target. Had we not made that initial move, that wouldn't have set off this series of events. We would have just been kicked out of this trade 21 days to expiration at about $7,500. Because we jumped on top of this and did that delta roll right off the start, we're kind of a little behind, but we're still doing fine. Let's just kind of move ahead a couple more days. And here we are on the 11 days to expiration. We've exceeded our profit target. And one of the things I always like to do when I'm back testing is I don't take for granted one day or just one time period to say that, hey, you hit your profit target. I like to see it for a good solid time period. So we'll just hop into the next day to make sure that that's still there. And it is. It's up 6,000. So it's reasonable to assume that if execution will happen to be fairly decent that you probably could have gotten out of this at your reduced profit target. Okay, so that was basically the May trade. The June trade is very similar. So let's just scoot over to the June trade, which started on, let's see, April 20th, 2012. So we'll switch accounts here. And we'll scoot over to our June trade. And we can go over this one a little bit slower because we're doing really good in time. So I just really wanted to show you this other thing. Okay, so that's going to start April 20. Must be April 20th. Okay, so here we are, April 20th. Again, June expiration, bearish butterfly. And I'll just quickly go over the risk management on this one here because I forgot to do it on the last one. So we're going to enter this trade, and we have a planned capital of $50,000 in this trade, a profit target of $15,000, a maximum loss of $15,000, and a reduced profit target 21 days to expiration of $5,000. So that's our risk management guidelines. If we come in here and look at our price chart, this is what the market's been doing. If we look at our analyzed graph, here's what this looks like. We're about 20 some odd points under the money. If you take a look at our delta theta ratios, we are 98 to 87, which again is a tad high. But notice the price difference in the butterflies. We paid $10.54 for these butterflies this month, which is actually much more reasonable. 12 is a little high, and the market's being skewed. 10.50 is very nice. And like I said, we're a little bit closer to 1-to-1, which is nice. All right, so from here, we'll just go ahead like 3 or 4 days. Run to the 25th. And the market has continued up. It's pushed a little bit higher. We have our delta theta ratio, which is less than 1.5 to 1. That's good. Our total delta is fine. And we haven't hit our add point up here of, we didn't talk reference points and add points. Since we started with 780 shorts, our reference point is going to be 780. Our add point is going to be 820. We're kind of creeping up on that. So we'll go to the next day, see what happens. Right, we get another 6 points here. 6 points here. Let's see. Oh, okay, I made a move here. So let me back off a little bit. I noticed some different strikes. All right, so we're up another 6 points or so. We're not to our 820 add point yet. We are now experiencing delta theta ratio problem. Since we are experiencing delta theta ratio problem and I'm 20 points over my shorts or more, which I'm almost about 36 points over my shorts, I'm allowed to do what I call delta roll, or roll this up 20 points. So we're going to go ahead and do that. So I move ahead a half an hour. You'll notice the shorts went from 780 to 800. I still have an add point over 820. Here is what our new position looks like on the analyze page. And notice our delta theta ratio has been corrected. All right, so we shall move on to the next day. And we've significantly exceeded our 820 add point. If we take a look at our price chart, if you remember this from the last trade, we're getting a pretty good up move here. So what we do is we go ahead and I added in the 820 butterflies. So now we're in the position 2/3. And again, we added closer to at the money simply because we had to do that force roll earlier. So so from here we'll just move on to May. Well, we'll do a few check-ins here. All right, it's going to take a while to update, so we'll go a few more days. Okay, we're up around 5,000, which is over our low profit target, but we're still we're way outside of 21 days, so I wouldn't even consider taking this at this point. Our Greeks are good. We're right here, nice flat delta. Everything's doing well. Let's kick ahead another 5 days. Let's do a position check. The market's just been kind of chopping around here. Came down. We've been sideways for a while. Our analyzed graph still looks really good, about perfect. Positions up about almost $7,000. Everything looks fine here. So we move along until the 16th. Let's hop into the 16th here. All right, so we are currently up $6,200. Let me, I think it was adjustment this day. Yeah, I did. Okay, so let me back off half an hour. All right, so here we are, May 16th. Here's our price chart. We've actually broken our support level. We're continuing to go down here. If you look at our Greeks, they're not terrible. I'm positive 196. Theta's up there, so that's fine. If I take a look at my analyzed graph, though, I am outside my break even. And we have a guideline that says if we're in 2/3, if we get outside our break evens, and actually the actual point where you do this is a little bit further down. A half hour later, the market was actually to that point, but here it isn't. But a half hour later, the market continued down. So we were down under here. So what we did is simply remove our 820 butterflies. So we came in, and now we are back to just having our 800s on. So when we take a look at our analyzed graph now, this is what our new position looks like. So we're back to 1/3, and from here we have a rollback point at 760, and we pretty much have the same reference points and stuff on the way up. So let's move on to the next day. I'm going to go back a half an hour because, again, we had to make an adjustment 2 days in a row, which is kind of rare, but that does happen sometimes. The market continued to run down. I actually hit our 760 adjustment point again a half an hour early here. We're not quite showing we're under 760, but we were by the time the market closed, by the time we hit 330. So what we did is we're going to take these 800s, we're going to roll them back to at the money, which is going to be, I think, 760. So we'll move on down. And here we are with the position adjusted. We're rolled back to 760. I'm not sure if I showed the price chart. We'll quickly do that. We had a nice breakdown here. And we are down. We've rolled back to 760. Here is our new analyzed graph right here. We are now 29 days from expiration, and we're up about $4,400. Again, we're getting kicked around a little bit with the market volatility being up and down, with the up and down chop, but not as bad as some other trades get beat up with this type of movement. So all is good, and I don't believe we do anything else here for a little bit. Let's go here to the 23rd. We're now up about 7,500. Pretty much in the middle of the analyzed graph. We haven't had to make any moves. Let's see. Okay, so we just basically go to 21 days to expiration here. We'll see where we stand. And at this point, we're up about $7,700. If you look at the price chart, we just kind of cycled sideways here from this big down move. And this is our reduced profit target of 7,700. So we would exit the trade according to guidelines, and that would be it. So that would be 2 winning months in a row with the bearish butterfly, which they weren't really big winners, but they were winners nonetheless, and it was a fairly good return on your investment. Most of these trades, they didn't give you a whole lot of, you didn't have to fully capitalize into the trades. So if you're looking at returns on actual investment, they were very, very good. Returns on planned capital, again, this one was about half planned capital, the other one was about a third. That's something that if you do the guidelines trade, because it's a scale-in trade and we really didn't get any aggressive price movement in either direction enough to scale us in, especially to the upside, then this happens in those months. Most of the time, we're looking at maybe one time a year you might see this. At least this month it got scaled into 2, but you kind of got chopped out of it. This year we've been having multiple months, month after month, where since I think the end of February, where the price kind of flatlined here, where it's difficult for us to get scaled in. So I was going to show you, if you wanted to make some modifications to your trade, and maybe put in some of the, I think most of you have probably seen the M3 tactics. You put in most of the M3 stuff, then you can do it much better. All right, I actually do have some questions here that I can look at. So let me look at those here. Oh, okay. This is a July question, so we're not. Who's saying this? Yeah, whoever is asking me about the 7/20 July bearish butterfly trade, you can email me at go-vertical vertical@hotmail.com, and we can discuss live trades. I cannot discuss live trades on SMD's site. Okay. So how many contracts can we trade with $5,000 capital? If that's your own, if that's your whole account size, you can trade. Well, you really shouldn't even trade one. You'd want a bigger account than that. I'd like to see you have 7,500 to trade this. You'd have a planned capital of $5,000 with starting with one contract. And yes, I do include my profits and losses in the total with the adjustments. And okay, and that was Ed Dalton. Yeah, so if you have specific questions on live trades, you need to contact me outside of the SND site. Okay, so thank you for forwarding those questions out to me. All right, so this is kind of a neat thing here. So let me come back and let's redo the May trade, and we're going to take a look at a few things here when we do this. Let's see, how much time do we have? Okay, so I'll try and be fairly quick with this. And I'm just going to do this freehand. So let's go back. I think we started May. We'll just put on a sample here. Let's just start a new account, or if I can do the sample account, where is it? Okay. All right, so let's go back to 323. 323.12 here. And we'll just kind of talk about things a little bit. So sometimes what I'll do is I'll take a look at the price chart and I'll say, well, what's the market doing? Well, the market, since this little blast off here at the end of February and this big run, we've been kind of sideways. We have a resistance area here. We have a support area here. I'm kind of expecting the trade to range, or the price movement to range, somewhere between 845 and 775 for the month. I know if I enter this this trade with a regular bearish butterfly and we never break this level, I'm never going to get scaled into the trade. So, that being said, I may want to modify this a little bit. And, so what can I do to do that? Well, I can take my same price management rules. I can still say I have $50,000 in planned capital. I have a profit target of 1,500. I got a maximum loss of 1,500. I'm going to enter similar to a bearish butterfly, but I'm going to make some modifications so that I'm more scaled in. So one of the things I can do is I could add and come in 2/3 right away. The challenge I have with coming in 2/3 right away on a bearish butterfly is that I limit my my range to the upside. So, if I were to enter a bearish butterfly here and the market decided to take off to 900, I could probably in most cases keep up with the market, right? Even though it's a bearish butterfly, and I could probably still keep up with it. As long as it happened fast, it happened soon. That would be okay. If I start this with 2/3 and that happens, I'm pretty much toasted. So if I go in 2/3, I'm going to want to make a modification to deal with that. So if I come in here and I start at the same 8-10 levels we started before, right? That was our original trade. 1, 2, 3, 4, 5. 2, 3, 4, 5. If I did that and I decided, and I take a look at my delta, it's like -111. I take a look at my, how fast things drop off. I'm kind of looking at my delta. I'm looking at my analyze screen. I can't get too descriptive in this because we don't have a lot of time. But that's my profile. I think I can hold till 900, say. I mean, just say if I did that and the market decided to take off on me. So let's enter my second third. We'll see what this looks like. Okay, I come in my analyze graph. My delta is going to be steeper now. I'm going to have more to lose if the market really decides to take off. I'm coming in at higher than normal delta. If you remember right when we did the original one on this call, on this trade, we were paying too much money for the butterflies. That's a bad setup for me if the market decides it wants to take off. So I'm going to want to do something to deal with that. So I can come in here and say buy we'll use some M3 techniques here, right? Just to hedge off our losses to the upside. So I'll come in here and I'll buy, just say a 770 call, and that's going to cut my delta down to a little bit less than where it was before. If I put my analyze screen here now, and if I had looked at my screen previous, this actually puts me in a position where I would be just as well off, if not better off, than before. It also puts me in a position where if the market comes back, I'm still in decent shape here, right? I still have my my trade design bearish butterfly negative bias built in, but I have a little bit of protection to the upside in case it takes off because I'm so heavily invested in the market right now. So why don't we just start at that position and we'll take a look at that, see how this goes. So we'll convert the trades. And like I said, this is an in-the-money call, and it's an in-the-money call because it's a delta placeholder. It's not something I don't want to carry. If the market sits, I don't want to carry vega and theta risk, so it's an in-the-money call. So we'll do this. And in addition, when we do something like this, we always want to have a plan in place. How am I going to handle the trade if the market takes off on me? So here's my basic plan. We're going to use the same reference point of 810. But since we're already in 2/3, if I use a reference point of 810, right, my add point would be 850. But since we're already in with the 2/3, it's not going to be an add point anymore. It's going to be a leapfrog roll point. So if the market comes up and it jumps past 850, I'm going to take this 810 all the way to 850. And then if the market happens to reach 870, my plan would be to pull this call off and add in the 850, which would essentially put me in the exact same position I'd be in had I been trading this with 1/3, right? And then I chase the market till as far as I can, and hopefully it backs into my price range and I make a lot of money. So that's my plan to the upside. Now to the downside, normally if I had 2/3 on, if I start running into trouble to the downside, I'm going to pull off this upper butterfly. The situation's a little different now. I'm now hedged with a call. I can no longer afford to pull off that butterfly because it's going to put me too positive delta in a situation I don't want to. So what we're going to do instead to make up for that, if we run into a problem on the downside, we're just going to roll the 830s back. And then from there, if we start getting whipsawed or chopped around, we're going to use M3 techniques just to try and stay on top of my risk in the trade. So that's our basic plan here. Let me quickly check see if I got any more questions coming in. All right, so is there a way to hedge your upside if you're worried about the upside soaring? Yeah, right. So this is I did do that, so we talked about that. Can I explain about this M3 I mentioned? Yeah, John. We have if you want to email me personally, again, govertical@hotmail.com. I can send you a link to a couple of options tribes recordings that we did on that, and you can take a look at it. Also, we are coming out with an M3 training series too, which is going to be really cool. So if I'm bullish, would you then go at the market or still 20 below? I would maintain 20 below. That's the way that I trade this. And again, I'm not bullish here. All I'm doing is I'm trying to create a situation where I can deal with the market in case it takes off. I'm not really bullish here. If you look at our charts, I'm thinking we're going to stay in range. But I don't want to trade in a manner that's going to require a support or resistance point to hold in order for me to win the trade. I mean, that's not the way that I trade. So that's all I'm doing. And I am picking, right, I want to pick a call that doesn't carry a lot of time value. An 80 delta call doesn't carry a lot of time value. Typically 80 or higher. You go too much higher than 90, you're really taking on extra cost for no reason. You go too much lower than 80, it starts to become a drag on the trade. So I don't want to have a drag on the trade. And yes, my Vega is a big number. One of the things you're going to find about volatility numbers is they don't react the way you think they're going to react. But you'll see, because we actually are going to have a down move. Volatility isn't as big of an issue as you think it is. Right. So volatility is not as big a position. The volatility or Vega explanation on how a butterfly reacts of volatility is a long one, so we'll have to scratch that for another day. But suffice it to say, it's not as bad as you think it is. All right, and one of the reasons is, just as a quick thing, one of the reasons it's not as bad as you think it is because that Vega is a composite number, and it's more relative to what vertical volatility skews on the options than it is to your absolute Vega number. But volatility can hurt you a little bit. I'm not concerned about that. Okay, let's start moving on here. So here we sit, and I'm just going to scoot ahead like 5 days at a time because I don't think we run into a problem here for a little while. All right, we've had some time go by. All right, so really nothing's happened here. Let's scoot ahead another 5 or 6 days. All right, we're down a little bit. We're up a little bit of money. Let's just take a look at the price chart, make sure we didn't really run into any issues here. No, we've been pretty much, we had this little gap up. We've been pretty much sideways since we started. Let's scoot ahead to maybe the 10th here. I think that was the day we had a problem with the other one. Let's see if we have the same problem with this one here. All right. So here we are sitting April 10th. We're outside the tent, right? And someone mentioned negative Vega earlier, right? I'm not too concerned about negative Vega if I'm negative delta because they kind of offset each other a little bit. I'm positive delta here. I'm positive Vega. I'm outside my tent. Right, so this is taking on more downside risk than I'd like at this point. The position is fine. If you look at delta theta ratios, they're 1-to-1. I don't trade that way, but some people look at those, they're 1-to-1, and that's not terrible. But I definitely would want to do something here at this point to deal with my downside risk. I don't want to go too crazy, but something that maybe cuts me down a little bit. So, why don't we just take this here? And like we said, when we set on our original plan, what we're going to do if we start running into a problem on the downside was to roll this back. So we're just going to take this and roll it back. And let's try rolling it back 20. We'll just see what it looks like. Plus 10. Let's take a look at the analyzed graph here. Right, that's not so bad. It cuts my downside risk a little bit. It kicks my theta up some. And again, what am I concerned with delta on the downside? If I get too much over 200, 250, I'm probably going to want to cut it under 200. We were right about at 200. If you look at the price charts, we did come down really hard into a support level. You've got to be concerned that it may break, and prepare for that. And I usually give people a little speech about support and resistance levels. These are not points where the market's likely to turn the other way. They're points where the market's likely to be volatile in either direction, and day traders like to day trade off of them. So usually I get to a support or resistance level. I'm planning on it breaking. I'm not planning on it reversing. So I'm going to hedge my bets a little bit at that point. So that's another reason maybe to kick this back a little bit. So let's just convert those. And I should probably just check my T-log here. So tie everything together. All right, so let's move on here we'll do 3 or 4 days at a time. See, it looks like we would have had an issue. So we're April 16th. All right, we got a nice bounce off our support level, which worked out okay for us. Here's the position here. It's starting to get up some money. Let's pop up to here. Again, our delta is good. Our gain loss is fine. Here's what our graph looks like. We're hanging in the middle. That's good. Let's pop up to here. All right, that's fine. Again, let's go to Monday. All right, so here we are, 25 days to expiration. Let's see. We're sitting here. We're back towards the back end of our butterfly again. Market must be down more. Yeah, so we're coming into the support level again. One of the things about butterflies, right, as you get closer to expiration, they get a little bit more sensitive to price movement. We're seeing that here because we're really about as low as we were before, and now our delta is actually, before it was like 100 and something, now it's 244, which, as we were saying earlier, is pretty high. So I'm up almost $10,000, which is 2/3 to my $15,000 profit target. I'm going to want to do something with I don't want to carry that high a delta in this situation. So one of the things I can do is I can maybe take some of these and roll them back again. So let's take a look at that. Let's take a look at rolling these to -10. And let's just try 20. We'll see what it looks like. All right, to cut my delta to 66. Let's just see what our analyzed graph looks like here. I kind of like that, right? So that puts me in a nice central position. The Greeks are excellent. That's nice. Okay, so let's just convert that. And all right, let's hit it a couple more days. I got to fix my T-log too here. Okay, so we had, let's see what happened here. All right, so we had a big up move here. Puts our delta at -272. All right, so now I'm starting to take on a little more upside risk than I want. We're looking at maybe, since we're in profit protection mode, we're looking at delta of maybe around 250, and maybe cut it down around 200 or maybe under 200. So in order to do this, how do I protect, a bearish butterfly or basically any type of butterfly position when this happens? And, like I said, the M3 techniques work very, very well. So, what I could do is I could actually come in here and I could add some verticals at, say, I could take some of these 790 shorts and I can bring them up to 810. I'm just going to do it on the call side. You can do it on either side, depending on if your portfolio margined or not. But if I go, let's just try the 5. If I do 5 of those, it cuts me to 187. Puts me in a position that looks like this. Let me just convert that quickly. And here we are, we're about 9100. I have to put this in here. And there we go, we're good. Okay, so let's go ahead. What's the price chart doing again? Oh yeah, so we're coming up. So let's hit another day. All right, get a continued up move. We're up at 342. All right, so I look at my situation. Tomorrow's my lower profit target exit. You know, maybe I want to do something here to remove my upside risk. So we look at the M3 techniques again, and one of the ways we can remove upside risk is to do, say, we can synthetically move back these 840, 860s, right? So we have plus 10, minus 10, right? That cuts me down to 169. And you see how it really removes a lot of the upside risk, keeps my beta real high. I'm still good if the market pulls back. And something like that in this situation will look really nice. So let me just convert that. And let's see, we'll go to the next day. Okay, boom. Yeah, the market continues to move against us. Delta's high again. Let's see. All right, so in this case, I do want to cut my delta down. I'm in profit protection mode, so let's try maybe 5, 10. No, we'll try 5 of these. Okay, 5 minus 5. That cuts us down. Well, it's almost 200. That's not bad. Yeah, I can live with that. Right, close. My Greeks are still going to be good. As far as my theta is still pretty high, my gamma is high. Now let's do that. We'll let it sit for another day, see what happens. Let me tie this in here. Okay, let's go another day. And again, we're only checking these once a day. We're not, worrying about intra-market price movement stuff. Okay, we finally pulled back a little bit. Oh, actually, right, we're under 21 days to expiration, and we're definitely over our low profit target. But if you're trading in this manner, you trade in a safer way, and you're more advanced. So, we have no problem pulling stuff into expiration if you know how to trade this way. So, all right, so here we go here. Let's move this forward, say, I don't know, a couple days. I don't remember if the market took off again or if it came back. All right, yeah, so nothing changed there. All right, we're coming down now. Let's see. Yeah, that still looks fine, right? That looks fine. Let's go to the next day. All right, so we're up 11,000. Our delta is too high again. So let's take a look at rolling back. Let's take a look at rolling back. Let's whoops. I start with 20, see if that does it, or see what it looks like at least anyway. Plus 10. And you can see we're just kind of doing the same thing over and over again with a market movement. Now if I do that, cuts my delta to 7. See, I got this funky thing going on now on the upside here. So to get rid of that, I just let's see what I have up here. Yeah, I can maybe flush this out. So let's plus 10, minus 5, minus 5. Let's see what that looks like. So we start pulling that. That gives me minus 95 delta. I think that is fine. Yeah, it puts us in a position like this. We're pretty much in the middle again. We're 14 days from expiration. I kind of like that. So let's just pull those off. We'll convert those. I think the T-log's okay. And I'm just going to shoot forward a couple days. Well, I'll just do one day, I guess. All right, so the price sat, and we've exceeded our initial profit target we wanted. We had to stand a little longer than we wanted to, but that's a big difference from taking a $5,000 profit or a $6,000 profit, right? So it's a little get. So we can try and push this if you guys want to, and our position's fine, right? Our delta's good. Everything's perfectly fine here. So we're just going to watch our delta numbers and our gamma risk too. Pull ahead a couple of days. See what happens here. We're fine, right? Flat still on the delta range. Another day here. All right, yeah, so we're up 21,000. Everything's still fine. Everything's flat. Let's go to Friday and then Monday. Friday's good, only 108 delta, that's fine. Up 22,000. All right, so now we had a big down move. All right, we're up 23, but our delta's 725. Right, that's obviously too high. That's obviously too high. So we can stay on the same path here, right? We can stay on the same path. We can get rid of let's see, get rid of 10 of these. Let's see, we'll get rid of 10 of those. That's if you choose to stay in, right? So if the market really acts up here, live trading, you've got to consider leaving. Let's roll back this here. Plus 10. Plus 10. All right, if I take a look at this, all right, see, I don't like my upside risk now because the market's been really whippy, right? So what if we just maybe cut a few of these here? So let's cut these down. Let's just go to minus 16 and plus 8. And yeah, I think that looks a little bit better to me. So so we're going to cut our size down a little bit, which is fine. We'll just do that, and we'll just convert that there. Again, our Greeks are really good. Look how high our theta is, and our gamma is not all that bad, right? It's reasonably under control. So let's go another day. All right, we continue down move, right? We're losing. We're up money because the theta is so high, but we're running into a delta problem. And that happens because we're 3 days to expiration, right? So if we take a look in here, one of the things I can do is I can start ripping out these 590s. So let's and that'll flatten me out some. So let's start pulling out some 590s. We might as well start scaling out. We're going to come out anyway. Plus 10, minus 5. That cuts us down to 148, puts us in a position that looks like this. I think that's good. So let's go with that. Let's convert this over. Now I have to look at my T-log here, make sure we're not missing stuff. Get a real profit and loss. I'm sure it's okay, but it may not be that. No, it looks okay. So, all right, so here we are. We're within reason. And again, we're 1 day from expiration. We're checking stuff once a day. All right, so, all right, we got to continue down move. We're high again. We can start, let's see, let's take a look at our analyzed graph here. All right, we can start pulling some of this stuff here. Let's go minus 5, plus 10. We might have to just pull out. See if we can create a position where we like that we can stay overnight, or if we just want to get out. Yeah, okay, so close. Let's convert those. Now I don't like necessarily my, maybe I want to flatten out a little bit. I can do 770, do something like, oh, I can flatten out this by rolling this back. Whoops, I don't want to do that. Minus 1. Probably pull this to maybe something that's like more like 90 delta. Let's put you minus 38. All right, so we can kind of convert that. And we'll just go into the last day. All right, we're down 13, right? So there you go. So theoretically, minus slippage, we got a gain loss of about 50% of our planned capital, which was 50 grand. If you went through this, I'm sure we didn't do anything that really could have put us much over our planned capital there. So that looks good. So let me just quickly look at the check. Oh, someone says it looks like I was naked short calls. I should have never been naked a short call. Yeah, I don't know if Option View is playing games with commission numbers, but they should be in there, except for this one. It's telling us commissions $43. That does sound low for commissions. I don't know. I don't have control over how they calculate that, but that should have definitely taken care of commissions. Okay, my email, go-vertical, B-E-R, T-I-C-A-L, at hotmail.com. Check my T-log. Okay, let's check my T-log. Did I miss an option? Well, it looks like everything's here, but that's okay. My long calls rolled under. Oh, okay. All right. Yeah. So it shouldn't have been naked short calls anywhere. If it was, that was by accident. It shouldn't have been, though. I don't think it was because I took off everything as I should have. Okay. Yeah. Mitch says not naked short. So okay, good. Yeah. So that's commissions were 220 at one point. So yeah. So I mean, even if you figure in $1,000 commissions. It's fine. But anyway, that would have been obviously a good trade once you learn some more advanced methods anyway. But yeah, I agree with you. The commissions for some reason do not show properly. I don't know why.